Perfect. Thanks. We can start. Right, good morning, guys. I just shared a question with you. Can you please look at it? I'll try to do many questions as possible today by quickly discussing with you guys. I've shared it on your WhatsApp also. All right, guys. So let's look at how to approach this question. So if you see this particular question looks at VBM and also economic value added. What is the chapter this is coming from? Which area? Where do we get this question from? So when there's a question, right, you should be able to quickly understand where it is coming from. So what I'm trying to tell you is, okay, there are, say, 17, 18 chapters. All those chapters should be there in your head, right? Then the approach towards a more structured answer is, possible, because then you know everything, right? I'll just show you. Now, VBM, EVA, transfer pricing, ROI, RI, everything comes together in divisional performance appraisal, isn't it? So that's the chapter. Screen. Guys online, you can see my screen, right? Hello? Right, thank you. So if you look at divisional performance appraisal, now you see um, as you can see, to take this chapter, divisional performance appraisal, right? You need to remember everything, problems associated with divisional structures, right? Structuring divisions as responsibility centers, that is cost center, profit center, investment center. What a manager can do in a cost center, what a manager can do in a profit center, what a manager can do in an investment center, right? How to calculate ROI, how to calculate RI, what are their advantages, what are their disadvantages, right? The comparison, which is better, right? Then what is dysfunctional decision making? Is something related to ROI, right? Then we come to economic value added. Then we come to value based management. And finally, we come to transfer pricing. Transfer pricing, as you know, can be taken as a separate area for a 25-mark question, right? Now, each of this, now, as you can see, now, if you look at this, there are about 8 parts. So examiner can plug one of this along with another question. Or he can test the entire 25 from this, like what he has done in this question. The entire 25 mark is from divisional performance appraisal and transfer pricing. Of course, he has not checked the transfer pricing, but then he has touched on these two for 25 marks. You understand? So, which area, how it can come? It can come in a mixture, right? There's no standard format there. Right now, if you look at this, VBM, what is VBM? Let's in VBM. How do we implement VBM and VBM evaluation? Advantages and disadvantages. Now, always remember, EVA is a measure under VBM. EVA is a measure under VBM. Under VBM, there are 3 measures, right? Number 1, EVA, economic value added. Number 2, MVA, market value added. Accumulated EVAs over a period of time, right, is assumed to reflect in your market price of the share. So total of that is what? Market value added. Over a period of last 5 years, you have made, let's say, 100 million economic value added. So now you have 500 million. That should reflect in your what? Market price. Market price means share price should have gone up. The value of that is what market value added is. And finally, you have SVA, shareholder value analysis, which is your discounted cash flow value of the business, NPV, right? So these are 3 measures under VBM. VBM is the mother, like the main topic. Under that, EVA is just, one measure. Now, what is VBM? Value-based management. Up to now, companies are focusing on profit. Profit is what? An accounting measure. I made 10 million profit. You can't be happy because you need to see whether there is 10 million cash. Anyone can report profit, but if there is no cash, what? No point. That entire 10 million can be credit sales. And if your customers are not going to pay, then you are at a loss. Opposed to that, EVA looks at how much of money did you make, actual money, cash flow. So VBM is trying to look at what is the real value addition to the business in terms of cash flow. So it will try to avoid non-cash flow items and certain accounting way of doing things, like depreciation. Money is not going out, but there is an asset usage. We only charge for that usage, not just based on some concept. Because, okay, during COVID, all the companies were shut down. Does it mean we use the asset? No, EVSs don't charge depreciation. Simple as that. So there are over 160 adjustments, but we are focusing on very few, around 20 maybe, right? To get an understanding. So VBM is the bigger area. Under that, EVA is one part of measure, right? Now let me quickly take you through this, so that when we do the answers, you will know what's happening here. See, VBM is an approach to management whereby the company's strategy, objective, culture, and process are aligned to help the company focus on key drivers of shareholder wealth. Key drivers of shareholder wealth. Now, if you look at your question, look at this. Evaluate whether VBM approach is appropriate for me. Is VBM good for me? Right? Now, what exactly are they asking? Exactly. If a company uses VBM, what kind of advantages will they derive? How many marks? If a question gives you 5 or more, what is the first thing you do? Talk about the explanation, definition. If you write the whole thing, you'll immediately get a mark. Explain what VBM is, right? And now you see, it takes the interest of shareholders as its primary focus. Begins with the view that value of a company, the total value of its discounted cash flow, not accounting profits. We're not focusing on accounting profits here. That is why, if you look at companies, right, they are trying to do window dressing, off-balance sheet items, isn't it? They do various juggleries to make sure that their accounts look good. But, we are from the finance, we know it's not reflecting the value addition. So that's what VBM tries to solve. Look, your accounting profit is useless. It's not the real picture. Tell us in discounted cash flows how much value you have added. 10 years back, you had 1,000 rupees, and now you have 1,000 rupees. It's two different feelings, isn't it? Now the 1,000 is useless. You can barely, buy anything properly, right? But 10 years ago, it was something. Still useless, but still something, right? To measure performance under VBM, a single overall organizational metrics is established, such as economic value added. The value drivers are identified. These are activities linked to long-term shareholder wealth. Now, when we did theory, I told you what the value drivers are. Increase in revenue, reduction in cost of capital, reduction in cash tax rate, isn't it? Reduction in working capital. You must bring those also into your answer, right? So let's make some quick notes here. Evaluate whether VBM approach is appropriate for Brazil. Take down. VBM focuses on VBM focuses on valuing a business. VBM focuses on valuing a business, and measuring using discounted cash flows rather than accounting profit. The approach is to ensure all activities of the business are undertaken to increase shareholder value. But now you see, what is the company's objective? Shareholders' objective of B is to maintain historic return on capital employed. Return on capital employed is an accounting measure. This is not in line with what? VBM principles. That's what you must say. Next line. Currently, the objective of the organization is to maintain the historic ROCE, maintain its historic ROCE. However, this does not create value for shareholders. Now you see, talking about buying large item of plants, isn't it? Recently diversified, hiring out large items of plant to large construction firm working on major infrastructure projects. These projects can last for up to 10 years. If you are working on projects that are going for 10 years, then depreciation, all that becomes useless. Even after depreciation, you might still use some assets. The proper way of assessing, using what? Discounted cash flow, time value of money, right? Next line. This becomes even more important. This becomes even more important since the company has now diversified into hiring large items for projects that last up to 10 years. Hence, the time value of money is significant. Long-term hire agreements may give positive ROCE, but may have negative NPV.
So may have negative.
No. We say if you use ROCE in the long term, it will give you positive ROCE, but the NPV may be negative. So hence, it's better to use VBM rather than ROCE. Got it?
No, I missed the line. ROCE, but may have negative NPV.
Yeah.
Okay.
Right. Next line. Now see, they talk about giving targets to managers, isn't it? Branch managers. Managers at business units are given objective of maintaining net profit margin of their own business units. Net profit margin is accounting. That is what you see here, right? For example, one business unit manager recently postponed some expensive staff training on improving customer satisfaction. I mean, come on, that's a cost, isn't it? In balance scorecard, we learned customer satisfaction is important for what? Generating revenue. So if you don't do that, your employees will end up giving not so good customer satisfaction, which will bring down your what? Business. Now, VBM tries to address this. Value-based management, do anything and everything to increase shareholder value, not accounting profit, because accounting profit is useless. Next one. Managers are given the target to maintain NP margins. Managers are given the target to maintain NP margins. Hence, they may avoid activities or items which would reduce profits in the short term, but which may have long-term benefits. Such as the customer satisfaction training, such as the customer satisfaction training, which a manager postponed. Next slide. With VBM, focus should be on the value drivers. Focus should be on the value drivers to increase shareholder value. These value drivers may be non-financial, such as customer training, customer satisfaction training, such as customer satisfaction training, which will benefit the company in the long term, in the medium to long term. Is suitable for B. As it will help the organization focus on creating shareholder wealth. Right, so what we did is we explained what VBM is. We showed them the issues in the company currently, when they don't use VBM. And finally, we said the advantages of VBM. We said, okay, fine, this is good for them. So we concluded. We answered the question of whether VBM approach is appropriate. Now, guys, remember, based on the area of the topic, examiner will design the question in that way. Now, see, we had all the points from the scenario itself for VBM. That's what happens when you understand the theory very well. What you need for that theory, the area, it will be there in the scenario. So it will be easy for you to answer. So as you read, you should be able to capture. Right. Moving on to the B1. Explain to the CEO what changes B would need to make to his performance measurement and performance management system if it were to adopt a VBM approach. What changes do they need to do? They want to adopt VBM. Okay, this is not the answer, that is implementation of VBM. But we need this to answer that question. Let's go through this first. Right, you went through this four, right? Right, going back to the question, what changes company need to make to its measurement and management if it were to adopt VBM? Number one, first thing they should do is what? Change the performance measure from ROCE to EVA. Now take down. To adopt VBM, performance measure should be changed from ROCE to EVA. Next slide. EVA would help them to identify real value addition, next slide. EVA would encourage managers to incur expenses which will maximize shareholder value, such as customer service training, next slide. With VBA, managers should be given targets. Managers should be given targets along with rewards for good achievement. Next slide. Targets should relate to their area of responsibility. Next slide. Identify value drivers and attach them to managers accordingly. Now look here. You have value drivers, you have performance measures. Performance measures will tell you whether you are performing or not. From where will you get the performance measures? You want to see it in your laptop, isn't it? So then you need what? Good information systems to capture. Next one. Better information systems. Better information systems need to be put in place. to capture measures that will be used under VBM. For instance, CEO stated that information on customer satisfaction. CEO stated that information on customer satisfaction is not available. So if you don't have information, then how will you measure? You can't do this, isn't it? So explain that a little bit more. Huh? Next slide. When we switch from a management style, that is focused on profit maximization within brackets ROCE, to shareholder value maximization, within brackets EVA stroke VBM, managers may resist the change. Managers may resist the change. Managers may resist the change. Yeah, because it's changed, no? Profit-based measure to value-based measure, right? This needs to be managed by proper change management strategies. Right, now the third part. Using the information in Appendix 1, advise CEO whether it has generated economic value for its shareholders. We need to use this data and calculate EVA. So I'll give you 5 minutes to do this. Okay, let's see how to do this. Visible to you. Okay. First, let's calculate the net operating profit after tax. So we have the net profit 10 million, right? Then depreciation 6 million. You add back the accounting depreciation, but you deduct the economic depreciation minus 14. Then interest, isn't it? Interest we can't deduct, no, because it is part of WACC, right? Interest is taken care by WACC, so we add it back. But then we have to deduct the tax on interest, isn't it? That is 15 million into 0.2, which is 20%. Then let me bring this here. And a reduction in bad debt provision. Why that I paid no 4.8 million. He repaid no. Increase in provision, we add. Reduction in provision, you need to deduct. And then advertising, which is a long-term value-adding expense, isn't it? Normally, when we do P&L, advertising, R&D, training are deducted as treated as an expense item. But when we do EVA, advertising, R&D, staff training are all capitalized and amortized over a period, because that is going to give you benefit over a long period. So here, now we are doing it for the first time, no? So we are adding it to our P&L. 0.6. So that's all. No other profit items. So we can now arrive at the no PAT, which is 9.8. So we got the net operating profit after tax. Next, we need the capital employed. So capital at start, right? Opening capital employed, 250 million. Always take the opening capital and then adjust. Why opening capital? Because that is the capital you started with to generate your revenue, to generate your income. Sometimes you would have added a lot of capital in the 9th or 10th month. That wouldn't have given you the revenue over a period. So it is always the opening balance, and then we adjust that to find the economic capital. So depreciation, we need to deduct, which is 60 million, non-cash flow item. And then bad debt provision that you add back, which is 4.8. So that's your adjusted capital. $238.8. Then we also need the WACC. I'll put it there. So the equation for WACC is 40/60, right? 0.4 into 12%, which is 0.12 plus. So we will put it in a bracket. Then you have 0.6, which is a debt, 60% debt. But they have given you pre-tax cost of debt. So we have to take post-tax. So into 0.1, 1 minus T, isn't it? That is 20%. One minus 0.2. Huh? At once. Yeah, that's also possible. Huh? So why is depreciation 16? I hope you can see my screen here. Accounting depreciation. Point number 4. That's your cost of equity, which is 0.48. Then cost of debt. 0.6 into 0.8. 1 minus T, right? Point 0. No. Let me turn to percentage. Right, Hassan, good question. You said advertised is capitalized, right? We don't add to capital at start. No, you will add it next year. Because now only you added to profit, no. From next year, you will add and start to amortize. There's a document on how you adjust each of these. Just put I'll share that on the group now. That you will know how it works. Yeah. Are you in that revision group, Hassan? Right, okay. Now you can calculate EVA. So EVA is profit minus capital employed into cost of capital. Profit, which is 9.8 minus capital employed 238.8 into cost of capital WACC 9.6. EVA is 13.12 negative. Remember, you should always write a comment the EVA number. If it is positive, that means they have added value to shareholders. If it is negative, they have destroyed shareholder value. Now see, accounting profit shows a positive figure, whereas EVA shows a negative figure. So actually, they have destroyed value rather than adding value to shareholders. Now, can you make that note by yourself? Spellings and all that. That's okay. That's okay. Grammar spelling is okay, not a problem. But it can't be really bad. Yeah. Here and there is okay. That's okay. That's okay. Those we don't mind. I've shared the TVA document and also technical article. Please go through both. In the technical article, the person who wrote it has done a question and he has adopted a different approach. Both are absolutely all right. Okay. You can have confusions like that, whether to add it this year or next year. That's all right. I think I've already shared before, but I'll put it now. I'll put it. Yeah, for the revision, there are a few students. Hmm. All right, guys, second question for the day. Can you start reading this? I will also share the question on the groups. All right, so I hope the scenario is very clear. It's a hospital that is funded by government, small hospital, which looks after minor injuries. Major injuries, they send them to the other hospitals. Now tell me, what is this question coming from? Which area? From these chapters you see on the screen, right? Yeah, where is it coming from? Chapter? Performance management in not-for-profit organization. The moment you see, now they are using the word not-for-profit, isn't it? The moment you see that, this chapter should come to your head. So what are the areas that you have in performance management in not-for-profit organization? Now, I haven't read the question, right? I'm just showing you the chapter. I'll just show you the brief of the chapter. All that will be tested in that question. You see that. Huh? That's how these questions are developed, right? So that's chapter 10, performance management in not-for-profit organizations. Here you go. What is NFP organization? Problems associated with performance management in NFP organizations must know. Then measuring public sector performance using value for money, economy, efficiency, and effectiveness. You should be able to explain what economy, efficiency, and effectiveness is. You should be able to come up with measures under economy, efficiency, and effectiveness. Then use of benchmarking and league tables, right? So benchmarking is comparison. There are various benchmarkings to do. League table is what? A table that will help you to compare one organization with another. For example, let's say you have a child, you want to put them to school. Okay, you look at, let's say, Royal College, the fees, distance, teacher to children ratio, right? Number of university entrants. Same thing you look for Thurston, you look for St. Thomas. Then that becomes a league table where you can compare each school and then you make a decision as to which school you want to put the child in. Entry requirements, and of course targets. How are targets set in public sector organizations, right? All this you must know. So anyway, I will just keep this open for now. Now let's go back to the questions. Number 1, explain why non-financial performance indicators are particularly important to measure the performance of not-for-profit organizations such as TRH. Not-for-profit organization, they don't have profit, so we can't use profit-based measures. So the question is, why non-financial indicators are important to measure not-for-profit organizations' performance? Quickly note down a few points. I'll discuss in 2 minutes. All right, quickly. So why non-financial indicators are important? Number one, there are no profit-based measures. Okay, lack of profit-based measures. By definition, they are not for profit. So we need what? Non-financials. Number two, you can say, wait. Patients are not paying a revenue, isn't it? They are getting a free service. So when you don't have revenue coming in, the focus on profit cannot be there. There is only what? Cost incurred, isn't it? So you explain it that way, yeah? Why no profit, measures. Huh? That's fine. Service provided. Okay, another issue is, how do you define a cost unit? Now, if you are manufacturing pens to make a profit, then your cost unit is a pen. If you are making wristwatches, then a wristwatch. If you are making chair, a chair. But here, is it number of patients who are walking in, or is it number of patients whom you treated on time, or is it number of patients who successfully got a treatment? Because some people are coming back. So defining a cost unit is also what? Difficult. In a profit-based measure, it's very easy. Based on the profit and margin and markup and all that you can do. But here it is difficult. So second point, defining a cost unit is also difficult. As it could be patient arriving at hospital or patient successfully treated. Next point you can say, just because it is becoming expensive, can you shut down? You can't. This is a public service, isn't it? Number two, this is focused on public service, provision of public service, and cannot be avoided or shut down due to any other political, social law, any other reasons. But needs to be provided and objectives are non-financial in nature. Next point. Profit-oriented organization have only shareholder to look after normally. But here you have what? Multiple stakeholders. So to manage multiple stakeholder expectations, it's easy to go with what? Non-financials. Write it in your own words. Multiple stakeholders can be managed with what? Non-financials in terms of their expectations. Next, they also have what? Multiple objectives. Separate. Yeah. Multiple stakeholder is one, multiple objective is one. So look at this. TRH objectives are all non-financial. So to measure their objective, we need to use what? Non-financials. And there are multiple. One looks at quality medical treatment, another looks at value for money, and another looks at innovative ways of delivering treatment to patients. In a question like this, remember, now see, explain why non-financial indicators are particularly important to measure the performance of not-for-profit organizations. In a questions like this, you should always say, although non-financial indicators are important, they should also have certain financial indicators related to cost management, because the funding is what? Limited. Mention that point. Because the funding is limited from the government, they should always have cost related measures to ensure they are within the budget. All right, let's move to the second part. Justify one performance measure for each component of the value for money framework. Use the TRH. And using that measure, evaluate whether TRH is delivering value for money or not. Right. So here we have to use this data. I'll tell you how to structure this answer. You have economy, efficiency, effectiveness. Okay. These are the three. Now, you need to do three things. One, first of all, for example, let's say economy, you define what is economy. When you suggest a measure, for example, let's say salary per doctor, then you show the calculation. Right? Then you show the calculation. Then you compare that with the national average and show whether it is good or bad. You need to do all three. What is economy? What is a good measure for economy? What is the calculation of that measure? And compare it with the national average. All right. Justify one performance measure for each component of the VFM. at TRH, and using that measure, evaluate whether TRH is delivering value for money. You understand? Right? I'll give you 5 minutes to do that now. Come up with 3 measures and compare it with the national average. All right, let's start one by one. I can crop this off, right? I need this face. What is economy? Buying cheap without compromising on quality, isn't it? So economy means buying low cost or cheap without compromising on quality. So now we have defined, right? What is a good measure? Yeah, salary for the doctor, which is, I mean, per doctor, isn't it? So 3.75 million measure, right? So 3.75 million divided by how many doctors? 25 doctors. Per doctor, we are paying 150,000. This is TRH. National, how much? 4.2 million divided by 24 doctors. That is national. Only based on salary, what you can say? Right now, this is how we make a conclusion. No? TRH is paying 150,000, right? That is per doctor, they are paying 150,000, while national, they are paying 175,000. So, what are the reasons? Number one, they have decided to pay less, right? But look at this average staff satisfaction ratio. This could be one reason, isn't it? Probably because they are low paid compared to others. That is one of the reasons why the staff satisfaction is low. You can write that. You can also say they have decided to pay less because they are either experienced less, isn't it?
Excuse me, sir.
Go ahead, tell me.
So what has the average staff satisfaction rating got to do with this?
Because you are paying less, their satisfaction will be low, right? Because now you see, if you work for national, you are getting 175. If you work for TRH, you are getting only 150. Your satisfaction will go down, right?
Yeah.
So that's what we are saying here.
Okay.
Of satisfaction also may be less experienced. Yeah, category. Yeah, never know. Let's say a doctor in Bandaravela or some far away. Qualified doctors, experienced doctors will not go there, right? Yeah. Right. Next, efficiency. What is efficiency? Exactly. Productivity. Max output per given level of input. Achieving maximum output for a given level of input, which is measured by productivity, input output ratio, right? What is the performance measure? Yeah, okay. So you can connect it to the objective, isn't it? Treating patients are a key objective, right? So performance measure is patient doctor ratio. Okay. Patient to doctor ratio. So that is 24,175 divided by 25 for national, 20,000 divided by 24. We can also give one more calculation here. 973 divided by 833, 1.17. So I'll put it as 1 minus. Hmm, what is the other way? No, that's okay. So 17% increase. Now, what is the comment? First comment you will say is TRH is treating more patients than the national average, 17% more. And for every doctor, they are treating 975 patients compared to 833 national. Now, comment, that is one. Also, they say they are overworked, isn't it? Right, overworked. Without overtime payment, without OT. Could be another reason why the staff satisfaction rate is low. Right? They work long hours. Right. Next, effectiveness. What is effectiveness? Output achieving your goals or achievement of your goals through the output. Organizational goals. Output. Basically, how well the company is meeting its objectives. To meet the objectives, they need proper outputs, isn't it? Now, they have multiple objectives. If you look at the scenario, they have multiple objectives. From access to high quality medical treatment, value for money, contribute to medical science by developing innovative ways to deliver treatment to patients, right? Now, by looking at the data, the best measure is this number of patients readmitted. If they are treated well and if they get cured, they won't come back now, isn't it? So, performance measure is number readmitted, right? Yeah. So, TRH, national. TRH, you get 1,830 patients getting readmitted for every 24,375. 1,830 divided by 24,375. The national 300 divided by 20,000. So in terms of percentage, TRH is 8%, whereas national is 2%. So comparatively very poor. What could be the reason? Yeah, probably because less salary, meaning they may be less experienced, right? They're working long hours, so they're tired, fatigue can get in. Exactly, right? So those could be the reasons. Now we have to make a final comment. Now, if you see, economy, TRH is doing better. No problem there. Green. Efficiency, they are doing better. Economy, they are treating, they are paid less. Better. Efficiency, they are treating more patients. Effectiveness, they are not good. They are failing in what? Effectiveness. So this confirms what the doctor says. They are working long hours. They are not paid for their overtime. That's a conclusion that you will make. No, it will come. Right, the last one, evaluate the extent to which the management style at TRH can be said to be budget constrained. Budget constrained. And advice on the implications of this approach for managing TRH performance. Now, there are three management styles: budget constrained, profit conscious, non-accounting style. Where do you learn this? Where do we learn this? We learn this in human resource aspects of performance management, right? The management styles. When you see that word budget constrained, you should get the idea. This is coming from here. Now let me show you. Here, Hopwood identified the distinct management styles of performance appraisal. Style needs to be considered when designing an effective performance measurement system. For example, how does your parent want you to become when you're big? They want you to become a swimmer, then they should go and put you for swimming. They want you to become a cricketer, okay, then train in cricketing. Management style. They want you to become a good, nice, kid, then teach good things, show good things, be an example. Similarly, for an organization, Hopwood says you can have a budget constraint style where you give them a budget and they stick to this. You can't spend more. Or you tell them a profit conscious style, spend money, make money. Or non-accounting style, you focus on more HR related aspects rather than looking at profit or budget. Okay. Now here the question is, okay, we have been given some data and they're asking, is it budget constraint? Look at this. Managers reward linked to achievement of short-term financial goals, for example, ROC. Advantages should ensure short-term target summit. It may also motivate managers to find it easier to focus on short-term targets. Managers are anyway focused on short-term. Disadvantage, short-termism. You're only looking at short-term for the detriment of the long-term. Stress and difficult working relationship. Doctor. Doctor is telling stress. Lack of flexibility. Government is not flexible. They're only giving a set amount. Stifles ingenuity. Can't be on your own. Can't be creative. Can result in manipulation of data. Because you are under stress, you start manipulating your data. So now the question is, do you have these features to suggest that this particular hospital is practicing budget constraint style? Now we need to give evidence from the scenario, right? Can you tell me a few points to say whether they are budget constraint? Okay, take down a budget constraint style. A budget constraint style focuses on short-term performance measures. Number two, According to the doctor, TRH always achieved its financial budgets. And this can be seen. And this can be seen. Look here. From the budgeted salaries to the actual salaries. Whereas national, they have ended up paying more. TRH, no. It can be seen through the budgeted and actual salaries of the doctors. And the doctor also said they're getting a lot of financial related targets, isn't it? That also says what? Budget constraint. Non-financials we don't have now. Next point. There is also a mention of doctors getting non-financial targets. Sorry. Doctors getting financial targets. Doctors getting financial targets. So this implies emphasis on financial target achievement. The above suggests TRH has budget constraint style. TRH has budget constraint style. And it helps. And it helps to be within the limited funding of the government. To be within the limited funding of the government. Put another subtopic, implications. See, we need to talk about the implications also. On the implications. So number one, limited budget. Encourages short-termism. Pushes doctors to work long hours. Without overtime payment. This will reduce achievement of objectives. This is evident through high readmission rate. So here, guys, what you need to do is for the implications, you talk about the negatives. That's what I told you. Short termism. Right? Now they say a lot of these staff, patients are sent to the other hospital. How do you know those are big or small treatments? Even the small ones they will send. Why? Because they already were overloaded. So mention that. Stress and difficult working relationships. Government is not allowing them to take more doctors. The volumes are high, isn't it? If you see the number of patients they are treating, it's much higher than the national average, over 933, right? So stress. And on top of that, no overtime also. So that's a hit on their motivation. Plus, no budget for, learning and development, for new ways of treatment, right? No flexibility. And all this will push them to do what? Manipulation of data. These are what you need to write under implication. All right, let's take a break and come back. All right, let's attempt this question now. Pit lane electronics components. Start reading. Right. So I hope you're done reading the question. Now, if you can see this particular question, target costing, right, comes from this area of the role of quality in performance measurement, right? As you can see, what is quality, Six Sigma, Kaizen, target costing, TQM, JIT, lean production. Lean production also you can apply to lean MIS, right? IT systems. So you can get question from anywhere. So like this in APM, under a topic, you will have a lot of branches, right? So each one of that you need to know the features, positives, negatives, right? Now, what is target costing? Target costing is where you take the price from the market because the market is already established, right? So selling price is already established. From that, you deduct the desired profit, the profit that you would like to achieve, and then you arrive at a cost that you must achieve to earn the desired profit, which is known as the target cost. Now, selling price, let's say 100. You want a profit of 20. The target cost is 80. Target cost is the cost that we must achieve. But when you estimate, let's say it says 90. So 90 minus 80 is what you call as a cost gap. Now we need to find out how to reduce this cost gap, because if you don't reduce, it will eat your profit. Your 20 will become 10. Understand? Normally, when it comes to target costing, there will be calculation plus a bit of theory in terms of other aspects, right? So here, A part, calculate the cost gap per unit in each of the 3 years of the booster's life, taking into account all estimated costs. So they have given you a few cost items. There are 6 marks, so it cannot be very complicated. 6 marks means it's about 10, 11 minutes. Right? Can you attempt this now? Along with the other details that are given. Right, let's see how to do this. 2018. Twenty nineteen and 2020. Selling price 180, 170 and 1. Then there's a 10% uplift, isn't it, for packaging? Post. You know, into 0.180. So that's your estimated selling price. Those are things that can be missed. Then 15% margin, right? Selling price minus target profit. Minus 0.15. Target cost per unit. Huh? Then we have to calculate the expected cost. Direct cost 134. Sub-assembly packaging distribution is 134. Fixed cost per unit. Fixed cost. How much? I think it was there in the scenario, no? 10 million into K number of units. Yeah, how much is that? What is the total? So let me put it here. $10 million divided by huh? Every year 10 million. So 600 into 0.1 plus 500 into 0.15. Yeah. You're saying to divide it by 3, 44.05. Yeah. That's the answer there. Sorry, every year. Yeah, annual. Okay. Okay. So project is for 3 years, no? Life of the project. Okay, that's the reason. A good question, but life of the project is 3 years. Otherwise, it will be huge. Then you won't be able to do costing. Right? So that's the total estimated cost. No, that is not applicable here. No? Also, remember these decimals have to be same. Huh? You can't have one for 2 decimals, another one for 2 decimals, another one for 3 decimals. All decimals have to be for 1 or 2 points. Okay. Within the question, that has to be maintained. If not, you will not get marks. Remember that. We have the target cost and we have the estimated cost per unit. Now we can calculate the cost gap. Target cost minus the total estimated cost. My goodness. So we are falling short everywhere. So in 2018, there was a gap of 9.8, 19.1, and 2020, 28.5. So that's all. Only this working will get you 6 marks. So you get 1 here, 1 there, 1 here, 1 there, 1 there, and another 1. Six marks. Any questions, anyone? ArivuPro. Right. So let's move to the second part. Advise on the extent to which target costing would help the company to achieve the financial performance objectives set by shareholders. Now, what is the financial performance objectives? When shareholders insist that for the booster project to go ahead, it must meet the financial performance objective of achieving 15% net profit margin after all costs for the duration of the scheme, right? So then they're asking target costing, to what extent this will help us to achieve this? Right, start taking down. Company currently operates. A traditional cost plus pricing method. Where customers pay. Where customers pay a fixed markup on the standard cost. This is okay. This is okay. Since the components are manufactured in the same way for a long time, and the cost structure is well understood. And actual and standard costs are very close. Next line. The booster product has an estimated market price and has to compete with existing competitors to stop. Target costing is where from a competitive market price, a desired margin deducted to arrive at a cost that should be achieved. The target cost is then compared with the estimated cost to arrive at the cost gap, which should then be reduced to achieve the target cost. Next slide. The marketing department has estimated the average market price of competitors' product and the likely market share. And the likely market share.
Excuse me, sir. Competitors' product after that?
Competitors, market price of competitors and the market share over the 3 years. Market share over the 3 years. Now look here again. Advise on the extent to which target costing would help P to achieve financial performance objectives. Now in target costing, you have selling price, you have desired profit, and then you have the target cost, and you have the estimated cost to arrive at the cost gap. You need to talk about all of this. Only if the selling price is accurate, you can achieve the target. Only if the desired profit you put is justifiable, you can achieve at the target. So that's what we are going to talk about one by one. Now, marketing guys have suggested a selling price. If that is wrong, then your margin calculation is also wrong. Cost gap calculation is also wrong. Extent to which is that? To what extent? The extent to which they have accurate what? Calculations, accurate estimations. Right? Next slide. The estimates are based on the success of a similar scheme and if the assumptions are incorrect, our calculations will also be wrong. For example, now if electricity prices are already high, consumers would have already put solar panels, isn't it? So we're going and giving another boost or whatever is not going to help because they have already found a solution. Write it in your own words. If electricity prices are already high, consumers would have already found a solution to reduce the electricity bills. The other point, domestic solar energy is a new market, isn't it? And they are estimating that consumers will pay 10% more. What if they don't pay? I mean, they say they are going to pay 10% premium for highest quality packaging or for communicating with the consumers' mobile phones. And at one point, they also say smartphone usage is less. So do they need it? No, they don't need it. It's like what is happening in Sri Lanka. We all have, advanced phones which has 5G feature, but nobody's providing 5G, isn't it? So the feature is useless, right? So next point, domestic solar energy market is new. And company has no experience. And company has no experience in estimating the market share or price for this product. The assumption that consumers will be willing to pay 10% premium, the assumption that consumers may be willing to pay 10% premium may be incorrect. Next is now currently they are getting 15% on its existing products. But if you go for booster based on target costing, there are a lot of other factors that you need to look at based on the external environment, competition, their products, their quality, their service levels, cost structure of the new product, isn't it? All that will depend on whether you can again achieve the 15% of the booster. Write that in your own words. Existing product, we already have an established market and we know the cost structure. But the new product, we know nothing of. So you won't know whether you will achieve the 15% for sure, because a lot of factors depend on the external environment. Right. Next, we can talk about the estimated total cost. Right. Now, look at this cost we have calculated. So we spoke about 10% uplift, no, when the customer will be willing to pay that, right? Direct cost 134. What if these direct cost estimates are, like it's all estimates, right? When they move here and there, yes, all estimations will be wrong. When one element within the calculation moves. Uh, exactly, right? So labor, then there'll be idle time, there'll be wastage, variance can be adverse, right? So those also you can mention. Errors in cost estimates. So you can say company has no recent experience. Company has no recent experience of developing new products, or estimating costs and sales volumes. Or estimating costs and sales volumes. This makes it more likely. That the cost estimates will be incorrect. Another important point. Are you selling to the end customer or the installers? Huh? Is it B2C or B2B? We are selling to installers, isn't it? No, they don't care about packaging, no, because they're going to take the product out and fix it. So we are making a bit of an error there, isn't it? Premium packaging. So why do you want to incur cost? Next point. Since the product is not sold directly to consumers, and the buyers are professional installers, they may not see value in highest quality packaging. This could be unnecessary. And with target costing approach, This could be avoided at the design stage. Next point, provide more training. Provide more training to labor. Provide more training to labor who are lower paid. And use them in production. Rather than using highly skilled labor, who are 30% more expensive. Now they also want to buy subcomponents, isn't it? In bulk from 6 different suppliers. Why do you want to buy from 6 different suppliers? If you break the suppliers, then your economies of scales will be lost. Your bargaining power will also be lost. So if you can consolidate, if you can reduce the number of suppliers, you can get a better bargain. Write it in your own words. Reduce number of suppliers and buy in bulk with better negotiations to reduce price. Look at the last one. No? Internal transport and handling, $7 per unit. Internal transport and handling, $7. How can we reduce that? Anyone who can tell me? How do we reduce internal transport and handling? Internally, for you to transport your goods here and there, you're going to spend $7. That transport is also going to reduce your, or rather increase your cycle time taken to produce. Isn't it? How do we reduce that? Change the layout of the factory. Right? It's like your sink is in the hall, cutting table is somewhere else. keep everything together, right? So put that internal transport and handling cost can be eliminated by changing the layout of the factory premises. So each one we are talking about here. That's the idea. Right, since time is running out, let me take you through quickly the last one. Advise me how Kaizen costing may be used to help boost the project achieve financial performance objectives set by shareholder. So now they are asking how this Kaizen costing technique can help you achieve that 15% objective. Now, what is Kaizen costing? Kaizen is continuous improvement via small incremental step. Kaizen costing is, guys, continuous small cost reduction in your production. Only if you reach your cost reduction, you can achieve your margin, right? Only if you constantly reduce, you can achieve your margin. So how do we do that? Kaizen focuses on producing small incremental cost reduction throughout the production process through the product life. So how do we do? A target cost is set for each production function during the design phase. That make explain Leander along with that. Booster is a new product. For booster, you need to set a target cost. These are total to give the total target cost for the first year, which is the baseline figure. As the production process improves, the baseline is reduced. For example, let's say your baseline is 100 for this year. Next line, you make it 95 and you try to achieve that. Then you're saving 5 here. Year after that, you make it 90. You're saving another 5. Little by little, what? You reduce, right? Cost reduction targets are set regularly and variance analysis carried out. Variance analysis will tell you the reasons for the variance. And then we adjust it accordingly, right? Yes. So there we have spoken in general. Now here we have to bring the Kaizen costing features also. Set standards, then continually improve, eliminate waste. Now here, using premium staff is a waste. You train your labor rather than using that 30% premium staff. Improve process systems and productivity, that internal transportation, isn't it? So you apply this. Right, few notes on the exam. You still have another 10 days. Okay. Number one, be very thorough with the theory. Now, with the 3 questions we did, you can understand how important the knowledge of theory is. Knowledge of theory is not to repeat the theory in the exam. It is to answer the question. What we call as application. Without theory, you can't do APM. Simple as that. Okay, I'm telling you. Right? Because each theory, when it is tested, you need to know what is part of that theory for you to write in the exam. Now look at target costing. It's all what is there on the book that we wrote. Right? Where they are giving us 5 or more, we need to even go and give the definition of target costing. Right? Same thing with what we did in the morning as well. So number one, polish your knowledge on the theory, the models. right? The tools, the techniques that they have given. So basically, these chapters, in chapter. Hassan and Siva, do you guys have this note that I'm sharing on the screen? I will put it in the group anyway, because this is easy for you to refer. Yeah, I'll share. Go through this and be very thorough. Calculations in APM, you don't get complicated calculation, but you get a little tricky calculation. So there you need to really carefully read the scenario to understand. Now here, some of you missed the 10% premium, isn't it? So that's the thing. You have to be careful. Marks are given for those. Every adjustment, every calculation, you get a mark. For example, ROC, let's say you are dividing one figure by the other, then you have a mark. For every work we do, we have a mark. But putting something there as it is, you don't get marks. Now, in this example, direct cost, we just landed it to. For that, you won't get marks. But if you do a calculation, then you do a mark, get a mark, right? So numbers, you have to practice, right? So be very thorough with the theory, then do as many questions as possible. Okay, it's best to do past papers rather than doing Kaplan or any other, right? I also have quite a bit of question papers. I'll share that with you. Try to do all those questions before you go to the exam. And remember, lot of the requirements will be in the scenario. You need to go back to the scenario and read what exactly they want, especially with the new format of the paper. The question will say, satisfy the CEO's requirements. Now you have to go back and see what the CEO is telling you. He will, in a paragraph, he will tell you to do three things. First, explain what is VBM. Then you quickly put a subheading, explanation of VBM. Then he will ask you, can you calculate EVA and tell me what we have done? Then you quickly put another subheading, calculation of EVA. So when you put subheadings, these are things that you need to answer in the exam. So nicely structure the notepad, right? And then go and fill the meat. Then go and fill the content, right? Put a skeleton for your answer. And try to give, now, if a question asks you, gives you 7 marks, you need to have 7 small paragraphs. When I say a paragraph, it can be 2 lines, 3 lines, 4 lines, depending on, what you're writing, right? Never write generic answers. Company has to improve efficiency and effectiveness. No, you have to say how. 30% of the premium labor is going to increase our cost. Therefore, we train our existing employees at a lower cost and then use them to reduce the cost. You understand? So you have to be very specific. You can't give just generic answer. Okay, mother, give me a nice food. No, you have to say what food, right? So be specific, right? And try to answer 100% of the paper. You can't pass by 80% or 70% in APM. It's tough. Your chance is 100%. Then you have a chance of getting 55, 60 or 65, right? And time management. In terms of time management, since it's a CBE exam, you need to have minimum 25 words per minute. Minimum, 25 words per minute. You work on laptop, but you don't write reports on laptop every day at office. But exam is like a report. Where you have to type a lot. So practice that also. Whatever these questions we are doing, type it in a Word document or a notepad. Use a notepad. That's better. Because Word document has a lot of features. No, Notepad does not have. Your exam platform is also like a notepad, where you have to do a lot of alignment and all that, right? So practice in that, because you should be able to type at the speed at which you think. Only then it will work. Understand, right? So then only you'll be able to structure, because only when you do, the difficulties there. Only if you clean the house, you know how difficult it is and how to, improve and all that. The more you do, the better you become, isn't it? So practice. And if there are any questions or anything, please drop me a WhatsApp, send me the image properly, and then ask me the question. Then I can, quickly give you a feedback. And if you want me to correct any of your answers, please type and send it to me. I'll give you my feedback. And don't go and write everything in one paragraph. Each point, put it in a separate paragraph, right? Leave some space in between the paragraphs and nicely structure. Don't put bullet points, just leave it as a paragraph. Calculations, do it in an Excel. You'll be given a spreadsheet, right? And comments, whatever, you put it into the notepad. Any last minute questions, anything? Right, so I will share some past papers with you guys on the group. So please do those. Okay. All right. Thank you then. Good night.